The cryptocurrency market is seeing one of its worst sell-offs since a market boom in 2020, prompting investors to be concerned and question why crypto values have grown increasingly sensitive to stock market gyrations. Stablecoins in particular are gaining popularity. As the name implies, this sort of cryptocurrency is supposed to have a consistent value because the tokens are linked to the value of a currency like the US dollar or a commodity like gold, providing significant protection against excessive volatility. So what's the deal here? What is the future of the Bitcoin market? Let's look at some expert suggestions to get a broad perspective. Anyone who follows the Bitcoin market knows that it crashed and burned a few weeks back. The only question that remains is why. The truth is that there is no single answer, albeit a variety of factors may be to blame. Why are the value of Bitcoin and other cryptocurrencies declining? According to market observers, the latest cryptocurrency market fall is being driven by two key factors: US Federal Reserve actions to battle increasing inflation and stabilize markets, and the implosion of Terra USD, a type of so-called stablecoin. In this video, I'll highlight two reasons why the cryptocurrency market is crashing. Macroeconomics is the first. To control the pandemic-driven economic slowdown, the Fed decreased interest rates, or the cost of borrowing, in early 2020, essentially injecting more money into people and companies. As a result, inflation has risen to its highest level in 4 decades. Prices rose across most asset classes, including traditional stock markets and cryptocurrency markets, as traders invested their money in anticipation of higher returns. Guys, while you're watching, please do well to like and subscribe to this channel. Rising prices cause economic misery for people since our salaries aren't rising in unison with prices, and they undermine economic growth more widely. To mitigate the damage, the Fed boosted interest rates by half a percentage point earlier this month, the highest increase in nearly 2 decades. The Fed is also decreasing the money supply to further limit inflationary pressures, and rates are projected to rise higher in the future. All of this causes concern among investors. Since the beginning of the year, the S&P 500 and Nasdaq stock indices have plunged by more than 20%. Meanwhile, the cryptocurrency market cap has more than halved from its peak of nearly $3 trillion in November to $1.3 trillion presently, according to statistics collated by CoinGecko, a digital currency market analyst. Bitcoin fell below $30,000 a few weeks ago for the first time since July. However, Bitcoin is the world's most traded cryptocurrency, accounting for more than 40% of the market. Terra USD is another reason. What has piqued the interest of crypto observers recently is Terra USD, sometimes known as UST, and its impact on its sister currency Luna. These are two cryptocurrencies established by the Terra Network, a South Korean blockchain project. UST uses Luna as a collateral currency. The UST token's value is tied to the US dollar, which implies that 1 UST should always be worth $1. If the coin's value falls below $1, it can be burned and traded for $1's worth of Luna. According to CoinGecko data, Luna began trading in May 2019 at around $3 and reached an all-time high of around $116 in April, during a period when most other large-cap cryptocurrencies were plummeting. The fall of Terra USD, or UST, a former stablecoin favorite earlier this week, was one reason for investor anxiety about crypto. When the so-called algorithmic stablecoin went far below its purportedly set peg to the US dollar, it shattered the broader crypto market. After a week of turmoil, UST lost that peg and traded as low as 13 cents on Friday. Meanwhile, Luna, its sibling cryptocurrency, lost nearly all of its value overnight after trading for $80 just a week before. As investors saw the stablecoin fall in value, they hurried to withdraw their funds, resulting in what some analysts term a death spiral. To safeguard consumers, major cryptocurrency exchanges eventually delisted both Luna and UST. The goal of the stablecoin and others like it was to provide a safe harbor for investors looking to avoid the volatility of other cryptocurrencies like Bitcoin and Ether by maintaining constant value regardless of market conditions. Consumer prices, however, climbed more slowly in April than the previous month, but still faster than economists predicted. The Federal Reserve raised interest rates by half a percentage point this month, the first time in 22 years, and Russia's invasion of Ukraine shows no signs of subsiding. As a result, the cryptocurrency dropped dramatically this week, with $200 billion in value lost in only 24 hours on Thursday. Bitcoin, which accounts for roughly 44% of the crypto market, has fallen to a 90-day low of $26,350. According to CoinMarketCap, the cryptocurrency returned to over 30,000 on Friday, but it was still down 15% for the week and more than 56% from its November high of $69,000. Another reason impacting crypto is its link to the stock market, which has recently fallen. Despite being long marketed as an inflation hedge by advocates, Bitcoin is behaving more like a risk asset, according to Bank of America analysts last month. Bitcoin, the most valuable cryptocurrency by market capitalization, is significantly less associated with gold, the most well-known store of value, than it is with the S&P 500 and the tech-heavy Nasdaq. But what happened to Luna? What's the big deal about that? As the price of USD fell, significant Luna holders cashed out, causing the number of Luna tokens to increase and the price of Luna tokens to fall, since Luna lost 99% of its worth. According to Bloomberg Intelligence, Luna's dramatic value decrease appeared to be the worst day for a financial instrument ever witnessed, prompting cryptocurrency exchanges to delist the coin, thus halting its transaction due to a lack of liquidity in the market. According to Edward Moya, a senior market analyst at OANDA, a foreign exchange platform, the specific pricing structure of the USD token could be one of the reasons for the severity of this drop. The USD differs from other stablecoins such as Tether in that it is not backed by a government-backed currency or commercial papers. It is an algorithm-based stablecoin that employs a complex mechanism with the assistance of Luna to ensure that its value is maintained against the dollar. Most stablecoins will hold actual assets to function, but USD's algorithmic solution was unable to handle the market volatility that we are seeing across the bond markets. Terraform Labs announced recently that it has suspended the blockchain that underpins cryptocurrency and will quote-unquote develop a method to rebuild it. In its biannual financial stability report, the Fed recently raised worries about stablecoins, noting that the fast-developing sector, which accounts for around 15% of global cryptocurrency market capitalization, is prone to runs and that its risks could flow into traditional markets. Is the cryptocurrency market now more like the stock market? For months, the cryptocurrency market, like the stock market, has been declining. It peaked in November, and with the Fed's strong liquidity tightening signals, all asset markets have since corrected. According to market analysts, the correlation between traditional markets and the cryptocurrency market is likely at an all-time high. If one falls, the other will most certainly follow, or vice versa. According to Sylvia Jablonski, CEO and CIO of Defiance ETFs, the correlation with the Nasdaq is at 0.82, up from historical levels of less than 0.5 on a scale of 0 to 1. Similarly, both the traditional and stock markets are moving in the same direction more than ever before, resulting in a spillover impact on investor sentiment. Experts are seeing a stronger association between cryptocurrencies and technology equities, which were among the worst hit stocks during the current market downturn. Some cryptocurrencies, particularly the market leader Bitcoin, were marketed as assets whose value would hold over time, implying that they would be a solid inflation hedge. However, as inflation has risen, Bitcoin's price has more than halved, making it less appealing to investors during periods of high costs. A big data analytics firm believes Bitcoin will continue to function as an inflationary hedge over time. Some forecasts predict that Bitcoin's value will fall to between $19,000 and $21,000 in the short term, but that it will be an excellent investment over the next 5 to 10 years. What comes next? Is crypto about to have a Lehman moment? Lehman Bros is a large investment bank that failed in 2008 and played a role in the financial crisis. Quote unquote, no, not yet. You can never say never in cryptocurrencies, said OANDA's Moya. Quote, quote-unquote, while there are potential triggers, there does not appear to be a systematic danger. However, a significant increase in the value of Bitcoin could be a forerunner to an increase in inflation, similar to what occurred between March 2020 and November 2021. Thank you for sticking with me to the end. Kindly give this video a thumbs up and don't forget to subscribe.